GameStop's in a crucial point here. We're seeing if we can correct from that giant sell-off and gap down, or if sellers will gain that control and push us further down. Now we're going to be doing a technical analysis breakdown on GME, GameStop. Now on the weekly, guys, it shows what this stock does. It's very volatile. It goes up and down in these huge swings, huge corrections. Giant run up all the way from a dollar to 120. And you see that giant correction right after that, that mirroring candle. You see another run up to around that $87 level. Try to get back up there, getting close, slightly lower. And you can see, guys, the stock's very prone to these huge moves up and down, huge swings. And we get in this descending wedge type of pattern for some time. In a volatile manner, come back down into this descending wedge that we have going on here, all the way to around that $9 level. Then we come back up around that $64 level, and then we quickly correct back down. But we don't correct the entire move. We hold slightly above that, and we consolidate for some time, break out once again in some sort of a volatile move. Buyers gain that control, but quickly get shut back down right to where they broke out. Once again, same thing happens, getting to around the same point, and then you see that drastic sell-off where we got that bad news recently, guys, we covered in the last video, where GameStop's had some troubles with sales. They've invested in Bitcoin, several other bad news that caused this giant breakdown. But it looks like we found that ascending support that we were talking about, and it looks like we are trying to trend back upwards. So I'm going to bring you guys to the daily to get a closer eye view perspective. Now, guys, on the daily, what I want to point out is this ascending support. Yes, we get shut down from all the bad news that GameStop had, but we find this ascending support that we had in the past, right? Hitting it a few times, 1, 2, 3, 4, 5, 6, about 7 times now, guys. And we see that we found a very important resistance point, and then we bounce right back up. So for the bulls, it's very good price action that you want to see. Yes, we had that horrible move, but then we're correcting quite nicely. We see one candle touch that ascending support, and then you see a nice bounce off, and we are trending upwards. And now we're at the area of where this candle wicked over. So we had that gap down, tried to move up. Sellers pushed us all the way down, but right at that $24 level where we wicked over at that candle, right around roughly that area. So this would be a crucial point to see buyers really step in here and break through that $24 level, reclaim this consolidation range of 25 and 24, and get this more major consolidation range that we touched up on at 29 and 25. You guys, we kind of are back in this descending type of pattern that we have marked up if you stretch it further. So you'd want to see a nice move out of that. Make sure this descending pattern really isn't in the game anymore. You want to see buyers take control here, see a nice move up out of that range, reclaim that $24 level, and furthermore trend to that 25.80 and avoid any resistance at this range. Possibly consolidating for a little bit within this range, and then you might see the breakout, reclaiming that level, and getting in this more major consolidation zone before moving upwards. Now, guys, look at the history of this descending range. We kind of double topped here. We had that very drastic sell-off. Sellers are holding control here, right, keeping us at the bottom of this range. You see buyers step in. You get that nice gap up all the way to the top of that range. But we get shut down, and sellers really gain that control with a gap down and a large red candle. Bears push us all the way back to that bottom of that range. We find that support along that $20 psychological level, get a few moves up, and then boom, right out of that and into this very tight consolidation zone. This is an energy building zone. Build some energy here. See sellers trying to push us back down. We find that support at $25, and then we trend upwards, getting into an even tighter, more compact range, right, in this apex, and we blow right above that 29 level all the way to that $35 level. That's where you see that drastic correction. In one candle, we almost correct all of that, big giant move. And then we create another apex-like formation, kind of a double formation of really tight consolidation. But instead of kind of building up that energy and squeezing out once again, we see that move to the downside, built with that tight consolidation, that meet of that resistance and that support, paired with some bad news. And that's a recipe for the downside, guys. Breaking out of a tight range, bad news, and you see that move downwards under that $29 level, gapping below a major consolidation range, a couple major support levels, but we do end up finding that resistance at that support that we were talking about. So that is important that we found that, and we didn't even bother to test that 2083 level where we found that support here. And furthermore, a lot of people thought with that bad news we would be headed to that $18 level where we saw some price action bounce off there, bounce that support at that $18 level, and then I bounce off that ascending support. Then you saw that move up, and we reached the start of that descending wedge pattern. Definitely nice that we held up at that ascending support here, and we're testing this $24 level. If we could see an ascending profile on the volume, that'd be helpful to see that leg up, to that $29 ultimate level, getting past these support zones and this consolidation zone. and getting back in that range to where we could see a breakout to that $35 level. For those wondering my short-term prediction, I think we do break above this level. I think we might chop around for a couple candles here, break above this $25 level, get back in this major consolidation zone, somewhat correcting from that movement we had. And I think we'll see some major, resistance at this candle where we gap down right around that range in between that 27 and 29. So it might be a little more choppy than we think, but one thing we do know is there's a lot more room to the upside than to the downside after such a drastic move in such a short period of time. I mean, this is 2 days of price action. One day, then after hours, aiding that gap down, then another day of price action, and you see that ascending profile after that. So it's a very quick time to have such a drastic move. I mean, we're talking about a 25% move to the downside. So in this instance, we definitely have more room for the buyers than the sellers. If volume can come in here and buyers can really flush in, I wouldn't be surprised to see a volatile move up, breaking through some of these really key resistance zones and trying to regain this overall gap up zone. So in the very short term, I'm pretty neutral to slightly bullish on this stock, meaning that I think we will see that leg up above these levels. Might be a little bit of chop, might be a rejection here, might be a rejection there, but I think we do get that movement above 24.45 and 25.81 and further back into this consolidation range. But we definitely cannot deny that very bad news that has a lot to play in with the stock. But the daily chart shows us that we're definitely gearing up for possible moves over closer resistance zones. All right, guys, now on the hourly, it gives us a better perspective of that gap down, that giant move down, breaking through these support zones. And we see 2 hourly candles touching that ascending support here, and then boom, we get that move up, higher low, get that move up, higher low. So we're moving in a stair step type fashion. So let's try to push it a little bit further down, but then we get that move up, creating that higher low once again. Now we're pressed right up against that 24.45. So as a bear, you want to see a rejection here, a further move down. You want to see possibly tapping that $22.49 level. They kind of make us chop around here and kind of aid that retest of that ascending support. So we got that stair step like effect, and then we had a point where price tried to break that stair step like effect, quickly correct, and we get another stair step like effect all the way to that 24.45 level. So what you want to see here, guys, is buyers push through that zone, push above that wedge resistance, but still have quite a lot of room to run, right? That'd be around the halfway point, right around above that 25.81 to correct this overall gap down. A little bit of chop is fine, but you want to see some nice moves out and reclaiming these resistance zones as support. I think price action is nice, right? Bouncing off that ascending support. Takes 2 hourly candles, so that really shows something, guys. Very much of a battle within this phase. We did end up getting that movement up, and we were in that overall ascending type of range, right? Following that, narrow ascending support. So I think if we do get back in this consolidation range, it's more likely that we would see a retest of that $29 level, but definitely more neutral in that range. I think in the short term, though, we do look good to claim that 24 and 25.81 and get back into this consolidation range here. All right, guys, so GameStop's looking pretty good in the short term, but we cannot deny that big sell-off, huge gap down. What we want to see for the buyers is to start to fill that gap down, reclaim those closer resistance levels as support, and kind of stair step our way up. You want to see volume start to flush in here, aiding very big volatile moves to the upside. And as long as we reclaim that major consolidation zone, guys, I think we are in a pretty good position here. But you do want to see buyers really step in and reclaim those important support levels. Now, if you guys want to see more GameStop content, make sure to like and subscribe. I'll continue to cover GameStop as well as other major tickers. Trade smart, and I'll see you guys in the next one.